all the 3D printed houses I've seen before, like not like just in general in the industry, they look like a gust of wind would like topple them. So this, if it's made out of concrete, that's.
Hello, everyone. Welcome back to another Kingscrowd Investment Roundtable. As always, I'm joined by our amazing investment analyst team here at Kingscrowd, Teddy and Leia. Thank you for joining us today. My name's Brian, Vice President of Product at Kingscrowd. We go over each week some of the different data-driven trends, different insights, and different market analysis to be able to help both startup investors and founders make more informed decisions. Today, we have two great topics that we're going to be diving into. First, we're going to be talking about this week's chart of the week put together by Teddy, where we're going to be doing an industry analysis in terms of the October 2024 summary for the industry. Then we're going to be going into this week's deal review, which will be on Printera, a company that Leia looked at. Well, the Fed actually just announced today, hot off the press, their next quarter percent interest rate, Fed cut. What that means is that as interest rates are going down, there is potentially going to be more capital coming into the markets looking for alternative places to seek that yield. Teddy, I'll turn it over to you. Did we start seeing any of those trends in terms of investment industry trends in October?
Yeah, so October was actually a pretty strong month if you look at some of the raises that got some really nice traction. So EnergyX, they're developing lithium extraction technology, and they actually raised fully maxed out a $75 million Reg A on I believe it was $495 million valuation. So very large investment volume there. And I think, again, as a testament to equity crowdfunding, especially Reg A's being an interesting way for some of these larger, more capital-intensive companies to raise large amounts of capital and not having to do it through institutions. I think another interesting thing here is basically 4 out of 5 of these are more like 3 out of 5 are like deep tech, very capital-intensive industries. So like Miso Robotics, they've raised like 120 million or something in equity crowdfunding over the years. They burn up like between 2 and 3 million every month. So like obviously very capital intensive. It's robotics, autonomous robotics. So that kind of makes sense. But again, they're still able to raise 10 million in 1 month. I think if you look there, how much did they raise this month? In this round, Brian? Like 21 million.
So in the current round, 21 million. They're one of the repeat issuers. Some of these companies come back and raise lots and lots of rounds of capital online. You can see their first round actually back in 2017. So they've done almost probably 9 or 10 rounds here since then. Yeah,
they're one of the veterans, same along with Boxable. They always have a round open, it seems. And then Starfighter Space, it isn't necessarily that surprising to see some of these like deeper tech type of capital intensive plays kind of being in this list of most of companies that have raised the most money in a single month. These companies require a lot of capital to get off the ground, to commercialize. So, if they're able to kind of get a group of investors that really believe in them, they can really pull in a lot of capital, and they're going to need it as they begin to scale. So, on the other side there, we have our top rated companies on the Kingscrowd algorithm. Again, ratings in general, they're kind of meant to guide in your due diligence process to kind of help you narrow down your search of investable companies. So, these are 5 that ranked very well, but you're obviously going to want to do quite a bit more diligence on them to see if it makes sense, if it fits your portfolio and fits your own thesis. But a lot of great ones in there. RegenMed, Amass Botanics, that's a CPG company with like tens of millions of dollars in revenue. RegenMed, they're in the healthcare data analytics space. Resound, they're using AI to help quickly kind of edit audio and video files, that type of stuff. So some interesting ones to look at and to keep your eye on. And you can obviously find a lot of these fine top rated companies on Kingscrowd and our Deal Explorer page there. So so that was kind of the companies that stood out this month. But
Yeah, and zooming out too, so I'm pulling up here our markets page. So you can see these trends. There's definitely been some acceleration, it looks like, in terms of the number of online capital raises. This is Reg CF equity raises only, including safes, convertible notes. But you can definitely see that we're kind of coming up here on 2-year highs in terms of the number of active raises last month in October. And even in terms of the amount of capital raised, I think there's still a little bit maybe on the demand side in terms of investors being willing to fund the number of companies, but we're definitely seeing an uptick in the number of active issuers that are online, the number of companies that are raising capital. Teddy, any other takeaways before we move on to our deal review of the week?
no, I think it's going to be really interesting to see how the equity crowdfunding market reacts to the recent election results. I think we're already seeing in the private markets on like secondary side. This is like in the VC space, like secondary transactions. I think we're going to see hopefully a lot of increased activity across the board here. We obviously saw what happened with the public markets yesterday, and right after the election all went up. So it'll be interesting to see what happens in the next coming months here, leading into the inauguration and all that. So probably topics that we'll be discussing frequently in the future.
Absolutely. And just one thing right off the bat, the reason it comes to mind. So 2 weeks ago, as most people probably recall, I was in Washington, D.C., and we were meeting with various groups such as the SEC. And we actually had one of the commissioners. So SEC has 5 different commissioners, and Commissioner Hester Peirce was able to come to our event. And I think as many people are aware, President Trump has not made it secret in any way in terms of his, I think, feelings towards the current chairman of the SEC, Chairman Gensler. So there may be some changes going on there. And actually, Commissioner Peirce, who is very much kind of pro equity crowdfunding, very familiar with everything that's going on in the space, wanting to help with capital formation, is apparently one of the people, I've read some articles online that says she might actually be one of the people that could step into that position as the new chairperson. So it'll be interesting to see for sure where things go. With that, let's move on to the deal review of the week. So, Leia, you've been taking a look at a bunch of different companies, and I think the one we wanted to talk about this week was Printera. So tell us more about Printera and what they do.
Yes. So Printera is a company that is developing a robotic arm capable of applying layers of concrete to create structures with various geometries, whether we're talking about decorative elements such as planters or actual house walls. Printera is one of many 3D printing companies that are launching on the market right now. And to try to understand why there's so many startups doing a similar thing, we need to look a little bit at the context of the current construction market. There are a couple of problems. The first one, there is a job gap of about 500,000 jobs that should be fulfilled, but the market has trouble finding enough workers to fill these jobs. So because we don't have enough workers, it could be interesting to get robots to kind of fill for these workers, reduce the amount of worker. We wouldn't really be affecting jobs right here, but just filling the jobs that are not being filled by the market on its own. The second thing is that building houses is actually pretty expensive, and it is unaffordable for many families. 3D printing companies can reduce the construction cost, the overall construction cost, by 15 to 30% of the final house price based on what companies kind of offer. Printera, in this specific case, is actually able to reduce the construction cost of a house of about 22%. So this is by doing 2 things. First, cutting overhead, and second, by being faster. Indeed, most of the 3D printing companies can help achieve the construction of a house by 20 to 30% less time. Same thing based on the technology and the company. So that's why the space is very interesting, and that's why we wanted to take a deeper look at Printera. I know that the space is pretty competitive, so I want to know if any of you had ever heard of any 3D printing construction company other than Printera.
Maybe it was 2 years ago or a year and a half ago. I'm located in Manchester, New Hampshire, and I had gone to a local event here. And I ran into someone at one of these startup events that told me they were going to raise capital online. And I believe it was on Start Engine. I was like, oh, awesome. What do you do? And turns out it was one of these other companies. I believe it was called Madco 3D. And they did 3D printing in concrete. And I remember what they were telling me about is that they could 3D print coral reefs. And I don't remember kind of all the specifics, but it sounded pretty neat just in terms of, obviously you hear a lot how coral is just so sensitive to environmental disturbances, right? Whether it's water temperature or people touching it or anything like that. And being able to 3D print coral to put it in and then start new reefs that actually could give life back to the ocean sounded really cool. So I honestly didn't check out that campaign, so I wasn't too close to it, and I didn't get into their actual business model and the deal terms, but I came across them, and that was the first time I actually kind of heard about this, and I looked into it. And then I found out, wow, yeah, like some of these places you can 3D print entire houses. As I had a mechanical engineer background, so I grew up with the kind of like laptop size, small desktop 3D printers where you could make little trinkets, but just the scale. And like you said, the robotic arm to be able to print now on industrial scales is very impressive. But Teddy, how about you?
Yeah, I was just thinking when you said you had your own 3D print, it's like, of course you did, Brian. Brian was mining Bitcoin in 2012. Like, it's not surprising that he was on the forefront of all this. But yeah, 3D printing is interesting. I feel like it's sort of been like, not just in the construction industry, but just our 3D printing as a whole has kind of been on the brink of being mainstream, and I feel like it hasn't quite gotten there or really near there yet. This company's interesting, Printera, because they're not really like selling really novel 3D printers. Like, that's not their business model. They're basically a construction company that's like executing on construction contracts. It's a very different business model than a company like R3 Printing, who they've raised a bunch of equity crowdfunding rounds, and their whole innovation is they're one of the only 3D printers that can 3D print metal products. And so that's like a unique patented printer that they've developed like in-house, and have all these trade secrets, and they're selling the printers themselves. So that's how they're making their money. Whereas Printera, it's more of a service based kind of model where they're going to, the way that they grow is they're going to need to continue to create these hubs kind of throughout the country with their printers in it, and then be able to execute on these contracts in different areas of the country. So the analysis there is, okay, like how much is it going to cost them to implement these printers in all these different locations throughout the country, and what is the capacity of those printers? That's how you kind of get an idea of the kind of upside and the ceiling there. So interesting. It's a very interesting 3D printing play that I think we haven't really seen before in terms of their business model. So it's a cool one.
Now, how about in terms of just their deal terms and their traction, Leia? How did that kind of look as you were assessing this deal?
Well, in terms of traction, they are very early. As you can see, only 100,000 in revenue. In 2024, they have about 220,000 already recognized, and they want to close the year at $300,000. So we're still on pretty low revenue. The valuation is at 15 million, which may seem a little bit high based on the revenue. However, it's way lower than the company that you touched upon, MacDo3D, which was valued at about $30 million when it raised, or another company that raised online called HappyScore, which raised its first round at about 100 million and its second round at 200 million. And you see, Teddy just say something very important. He talked about the business model of the company. There's about 30 to 50 competitors in the United States doing the same thing, and over 100 in the world. And there are about two different types of business models that we've seen. The first one, like Printera, like Teddy says, the company needs a warehouse in which it's going to print the walls, and then it's going to be delivering the walls on site. There's a very successful company called Mighty Building that is doing that. They've raised at least $150 million from institutional investors like Y Combinator, for example. And they're a pretty sustainable branded company. They mostly print exterior walls. The second business model of companies like HappyScore is that they just take care of building the robots, and then they're going to sell or lease the robot to construction companies, and they're going to sell the concrete material that goes with it. So what is the difference between these two models? Well, the first one, when companies need a warehouse, is way more capital intensive. It's going to take way more funding, and it's also kind of less scalable. And I feel like you need to have maybe a specific technique, a specific material to really have a value proposition. Otherwise, if you just print was indoor, well, you're another construction company that is maybe cheaper and faster, but really you're going to operate like a construction company. But if you're leasing your robots like Apiscore or another company called Icon, ICON, you may be more scalable because you just take care of selling the robots, and then you're going to get recurring revenue from the lease of the robots and from the sale of the concrete material. So as investor, we should try to think, what does it really take for 3D printing companies to be successful? I think it takes a lot of capital, like Mildy Building has been able to pull off, and it also takes a scalable business model. And I think when investors try to look at Printera, they should think, is this company able to raise a lot of capital online so they can grow enough that I can get my return so they can spread around the country? And how scalable actually is it? The main risk with 3D printed concrete is the adoption risk. We know that the construction industry is not an industry that is really adopting new technologies at a fast pace. We see a lot of reluctance by contractors to use these robots. So Printera will really have to set up a strategy to get their products adopted by contractors, by construction workers, in order for them to grow. So that's also one of the major risks.
So what do you think? Would you live in a 3D printed concrete house?
I think that the house looked really good because they're able of building these shapes that is way more complicated with only humans. So I really wouldn't mind. What about you, Teddy?
I mean, yeah, with concrete, that's strong. Like, I feel like all the 3D printed houses I've seen before, like not like just in general in the industry, they look like a gust of wind would like topple them. So if it's made out of concrete, that's, yeah. See, this looks. This is
an example house here, right? I think.
Yeah.
Oh, this is where they actually build the columns of the house, but not the house itself.
The columns, okay. But you got to say, like, there is a design aesthetic, I would say, to, we were talking about perhaps there's industrial applications like breweries, which usually have, a lot of exposed scaffolding and they don't try and like finish it nice. But given their print resolution of just how it looks and how it deposits it, you can see it is, it's pretty aesthetically pleasing in certain ways. So I could definitely see different types of applications. I believe this is showing the reef, if I'm not mistaken, when they printed the reef. So, well, I think this is just another great opportunity that investors, if you're interested in learning more, feel free to head over to Kingscrowd again, check out the deal page for it. Again, you can also sign up for our weekly newsletter, Pitch Reviews, where you get a lot of these great data-driven insights, other deal reviews. But other than that, thank you everyone for joining us this week. We'll be signing off until next time.